Let's get started again. I was apparently talking and nobody could hear me. I didn't even realize I was muted out. So thank you all for joining. A lot of good new faces, old faces that are with us. Fantastic. Glad you could make it with us. Making this a very special event with respect to Candlestick Basics for Improved Profits, as the title says here right now. So I'm assuming everybody can hear me now. Give me a couple of yeses, or at least an A for audio to let me know that you can actually hear me at this point. That would be great. Terrific. Thank you very much. That's good enough. Got it. And you should be able to see my main slide here, Candlesticks Basics for Improved Profit. So had a lot of requests with respect to understanding candlesticks a little more, and I think it's we've been delving into it a lot more than ever before. So it's good to go more formally at this point, get a better understanding, get a better foundation of what candlesticks really can present for your everyday trading. Even if you're not an everyday trader, it can be used on any particular time frame, as we're going to find out momentarily. But nonetheless, as the Japanese proverb says here, a good beginning is the most important of things, and I think we've got to start somewhere. We've got to be able to start with some kind of a foundation to get a better understanding so that we can use these things to our advantage. And so here we are. We're going to start off with at least some of the basics. So keep in mind that some of you may know already what I'm going to be talking about. Others may not. I'm going to be going into some pretty basic stuff initially and then eventually getting into a little bit more detail. So here's what we're going to end up learning. We're going to end up learning about the anatomy of the candlestick first and foremost. And as I said, a lot of you may already know what this is, but just so bear with me for those who may not fully understand what a candlestick is and what it represents as well. We're also going to be going, in terms of what the candlestick reveals, because it does reveal more than just price. There's a lot more within there in terms of psychology. We're going to try to understand that a little bit as well. And then, of course, the most commonly used candles that you're going to see more often than not. That's kind of what we want to go over tonight primarily. We're going over a short list only, not a long list. So, and I want to make this evening as interactive as possible. I want to make this an evening where, your hands are on the keyboard and you're raising your hand, for that matter, while you're typing. So as I may be going into a new slide, if you still want to cover something regarding that prior slide, ask a question, raise your hand so at least I know you're typing something. But let's make this as interactive as possible. We're not going to have open mics. We're just going to simply have typing, kind of a chat session-like thing, but essentially I want to be able to see questions to make sure that you're fully understanding and getting and grasping. And I'm going to try to make this where I'm asking you questions as well so that you're fully engaged and looking at the screen and learning as a result of what I'm going to be asking you as well. So let's make some fun out of this. I don't know how long this session is going to last. It shouldn't last all night. I'm hoping it's going to maybe last about an hour. So that was my plan anyway. So let's get moving here. Let's do a little more. So this, in terms of candlesticks, that's why I had the Japanese proverb, because they were in fact developed by the Japanese back in the 1600s by the actual Japanese rice traders. They were analyzing rice contracts and they came upon a system. In fact, if you go back to some of the old literature and the old books from way back, they had a progression of how they eventually developed into the ultimate candlestick. When I started trading, we started with candlesticks right away, and I had no idea, that this is something that never actually occurred, never existed in North America until not that long ago. And it was Steve Nissen who, while he was working for, it was either Lehman Brothers or E.F. Hutton, which he always, he likes to make a joke saying it's the E.F. Nutton now. When he used to work for them, there was a female that used to work in their office that was actually doing all the Japanese trading. They used to do that all, of course, back then. There was no internet, and everything was done on paper, and she had charts, and she had all kinds of things. Yes, there's a button for raising your hand. If you look on your control panel, there is a button there somewhere. Let's see here. So, yeah, he's got very curious as to what she was looking at and what she was doing, and so he got extremely curious, got all the books, spent all his own money to translate the books, and spent years and literally tens, if not hundreds of thousands of dollars translating them, and made a couple of books initially. Now has a full-on website and all kinds of educational material and DVDs and so on, which is quite fascinating. And there's, quite frankly, a number of levels of interpretation. When you start looking for candlestick interpretations out there, at least when I first started trading years ago, I got a manual that covered, dozens and dozens of various candlestick patterns that were just all in isolation, meaning that you'd see one or two or three groupings of candlesticks and had a name, and usually sometimes it was a Japanese name or sometimes it was translated to an English name, and then there was a little bit of a description. Well, with nothing in context, I didn't realize how much of a guy that I am in terms of I have to have things in context. So the more things are in context, the more I understand it. And when something wasn't in context and it was just theoretical, it's hard for me to really grasp what it means until it's put into practice. That's the way I am. And so candlesticks just became this thing on the screen. And I could never quite understand the manual as much as I wanted to try to understand it. I gave up because it was too theoretical. There was nothing in context and there was no way of learning it correctly. And as I said, even more recently going through the internet and researching, you're going to find all kinds of individuals who have either written their own books, aside from Nissen himself, and others who have webinars, they have slides, they have presentations, and they have their own twist, which quite frankly is incorrect. The Japanese had a very strict way of interpreting things, and others now have sort of had their own interpretation. They've made it their own, and maybe it works for them, but it's not the prodigy, it's not the purity of how it was supposed to be read. And I think that if you go back and look at how the purity of what it's supposed to be, it makes the most sense. When you see the other versions of it, it's not quite as clear anymore, and it's a little more vague, and it's harder to interpret, in my opinion. And I've seen it all. I've seen most of them. Well, not all of it, but I've seen a number of individuals and how they go about reading candlesticks. And quite frankly, there are a lot of errors in their trading as a result. They think something's happening, they react based on something, and unfortunately, they end up failing miserably. Now, going a step further, candlesticks are not an end-all be-all either. They're not perfect. They are just potential. They are not absolutes either. So we're going to get into that as well. So let's look at essentially what happens here in terms of, when I started learning candlesticks, and perhaps the same thing with you guys, it appears that, on the surface, especially as you start reading the books or the manuals or the interpretations, that's a little complicated, that there's a level of confusion behind it. It's not, as I said, when I read the first books on it, to me it was quite unclear, and it was very, very confusing. And I just gave up on it. I didn't care. But I want to say the benefits of the candles, quite frankly, they really are quite easy to understand, especially when you put them in context. And yes, there's variations and there's nuances, but still the basis of them, especially if you don't go trying to understand literally the dozens and dozens and dozens of candlestick patterns that are out there, if you just stick to a certain number that you're going to see on a regular basis, you're going to do extremely well. So they're actually easy to understand. They are primarily considered early reversal signals, meaning reading tops and bottoms, which is what most people try to do anyway. But they're still useful midstream, and they're still useful in ranges. They're still useful in trends and channels. They're still useful in all of that as well. They are pretty much going to be used as a safety first. When you look at them, there's going to be rules around them that you want to follow. That way you're trading as safely as possible with the best rules possible, with the best kind of principles behind them. And when I have East and West, well, East meaning the Japanese candles. They have a power within themselves. They have a level of psychology, a level of information within that are truly, truly brilliant in themselves. But when you combine them with Western indicators, meaning maybe you use a MACD, maybe you use trend lines, maybe you're using gaps, maybe you're using channel lines, you're using a stochastic, an RSI, an ADX, whatever it may be, something that you're using as an indicator, whether it be 1, 5, doesn't matter. If there's something that you like that you're very comfortable with, you're going to find that it will complement it wonderfully, and it will only improve your trading skills every single day. So they work the best. Japanese candlesticks truly work the best when you combine them with a Western indicator. The Japanese didn't have their own quote-unquote Eastern indicators other than just candlesticks. That's all they had. So when Steve Nissen brought it over here, the fact that now everybody uses candlesticks, institutional investors use candlesticks as well, that it's quite phenomenal that it was this one guy that did this back, I think it was in the 70s was when he did this, 70s or 80s. It seems like it's just one of those things that's been here forever, but they were not, and they certainly need to be used in the proper way. Know that they can be used in all markets. They can be used in Forex, any kind of currency. They can be used in ETFs, any kind of indexes, futures. In fact, when Steve first used them, when he first was interpreting them, he was a futures trader. So they work beautifully with futures, and they work beautifully with anything and everything as well. And it doesn't matter what time frame. They will work on 1-minute charts, 5-minute charts, 15-minute charts, hourly charts, daily charts, weekly charts. It doesn't matter. They work the same on any time frame. The only thing I'm going to maybe mention is that if you end up with an overseas chart, an ADR, for instance, that has an interpretation on its charts based on what happened overseas overnight. It's those kind of charts you might pull up, and there's literally gaps everywhere. Like I think it's FXI is a good example. FXI is the ETF that essentially covers the Chinese market. It's got gaps everywhere, constantly. That's where it's not necessarily going to be working as well. But otherwise, traditional charts absolutely works very well. Now with Forex, there are some nuances clearly, because with Forex it's open essentially 24 hours, and there are no gaps. No gaps occur in Forex. So consequently, based on anything that forms in terms of certain candlestick patterns that have gap formations, if you will, where closing price and opening price may shift a little bit, that does not occur in Forex, and so there's some variation in interpretation. But we don't use Forex, and so if there's ever a Forex trader out there who wants to learn it, then I suggest you go straight to him. He's got a special Forex site and training just with his candlesticks alone. So as I said, all markets, all time frame, and also will help accelerate your analysis as well. So, all right, so candlestick charts display the open, they display the high, the low, and the closing price. All the things that we always want to see naturally in a format similar to a modern day bar chart. We all know about bar charts as well. That's pretty similar, and I'll show you the variations and the changes, or at least the comparisons. But also in a manner that extenuates the relationship between opening and closing price. So there's a level of sentiment, there is a level of psychology that you can actually read in a candlestick, in my opinion, that you cannot necessarily see as clearly when you first look at a chart, when you're looking at a bar chart relative to a candlestick. So here's just very briefly. You've got a candlestick, it's white, it's a white bar. This is a bullish candle because it's white, otherwise it would be black if it was a bearish candlestick. So again, it represents a one period of data. So it could be a 1 minute, could be an hour, right? It could be 15 minutes, it could be a daily, it could be a weekly. It doesn't matter. Any of those you've got, and let me get my little trusty pen here very quickly. Actually, I can do a spotlight. So you've got the shadow above, you've got the lower shadow below. There's the closing price, and there's the opening price. Okay, so it opened lower, closed higher, hit a high, hit a low. Okay, that's essentially how that works out. So as a comparison now to the bar chart on the left versus the candlestick on the right, you can see on the left you've got the lower open. Let me this time I'll use my pen. Might work a little better. So here you've got the open, the low, the high, the close, and vice versa. On a down day, it opens higher, closes lower. So you can read that. That's fairly easy to read. I just prefer looking at that now, because now red and white, in some instances it'll be white versus black, or in this case where the white could actually be green, and I'll show you that here as well. So that's the kind of the comparison you see there as well, and this is again what I'm talking about. Essentially you've got left side, you've got the low, open, close, high bar chart compared to a green versus red. I use charts that have red and green. I like the visual, I like the color. Just as easily you can use white and black, but I just like a lot of color in my chart, so I prefer that. It stands out better. I prefer it. It's just much easier for my eyes. All right, so that's the basics essentially of the bar chart versus the candlestick at this point. So now, in terms of the psychology of the sentiment, the candlestick itself reveals the force behind the move. So to me, when you look at it, you can actually see the fact that it's white. You can see the size of that body, the size of that real body, the white portion or the green portion or the red portion, tells you truly the psychology and the sentiment behind it. Again, most candle signals are potential reversals. Nothing's absolute. And as I said, when you start combining with other westerns, which I'll show you here momentarily, And that's where the real power lies. And that's where you have greater confidence also in making that decision as well. How to make a decision, where to make a decision, when to make a decision, when you push the button. Just because a candlestick shows up as a reversal signal, does that mean it's a buy? No, it does not. It's a potential buy. And if you can see some additional coincidental parameters and other indicators and signals, and the more you've got, the more trustworthy that signal can be, and the more confident you can be, the more the odds are in your favor at that point. So again, not all candle signals are meant to be traded. You've got to think about what you're looking at, and then of course applying what you see to the action behind it. A reversal signal may not be confirmed necessarily immediately. It would be nice if it could be confirmed within a day or two, or within a candle or two, but sometimes, I'm going to show you later, it may not happen for days and sometimes weeks. And actually, sometimes that's a good thing, because that's when you will trust it even more so. And I'll show you what I mean by that. It actually becomes a lot more trustworthy in some instances later. The other thing, the real body, the longer the real body, the stronger the momentum. Makes sense, right? The longer it is, the bigger it is, the stronger the momentum. The relative size also, and the position of the shadow above or below also displays the extent of price rejection. So that's what I mean when I say the candlestick really gives you a lot more information, the true force. The size of the real body will tell you if it's weak or strong. The size of the shadows tells you just how much rejection or lack of rejection there might be. So if you've got a bearish, long upper shadow, that really offsets the rallying strength that's behind it. Conversely, a bullish, long, lower shadow will hint that the bears are losing force and the bulls are really trying to push this thing higher and reverse it. Right? Make sense? Okay, so these are, in my opinion, and also in Steve's opinion, Steve Nissen that is, the 28 signals that he would use more often than not, that he would likely see more often than not, that he would rely on more often than not. Like I said, there's way more than this. You've got 13 on the left, 13 on the right, making 26, and then the 2 on the bottom, which are neutral. Doji and high waves are considered more neutral. So you got 28 major candlesticks here. And left to right in the green versus red, those are simply their opposites. The hammer and the shooting star are their opposites. The inverted hammer and the hanging man are the opposites, and so on down the list. They are simply their counters, their brothers, if you will. So these are the ones that we would be looking at and probably discussing. Some of these, some of you in coaching sessions may not even have heard some of these, like the 3 white soldiers I mentioned, I think in one article that I wrote a long time ago and sent out as an email. The tweezer bottoms and tops I've not discussed at all to this point, although because I'm going to leave it for a while. I think, quite frankly, if we can start slowly and go with the ones that we would most normally see, most often see, if we can start understanding those first, then we can start expanding our repertoire a little bit and get to know the other ones a little bit more. So we're going to go right now with just 6 tonight. That's it. That's going to be enough for now, I think, because I think there may be enough questions going forward. Can I print these pages? I don't know. Can you? This is a video right now. It's being recorded. I don't have this available right now in PowerPoints, and quite frankly, if I did have the PowerPoints, they would be in full color, so if you want to print them, you'd have to do something on your own end. You'd end up with all kinds of ink being used up. So right now, they're not converted at the moment, just so you know. Okay, so with that, as I said, those are the only 6 we're going to cover right now. And I'm going to start off with the hammer. And the hammer, you've probably seen this thing before, chances are, and whether you've recognized it or not, I don't know. But right now, what we're going to do is we're going to essentially go through the descriptions and just get an idea, and then we're going to look through some examples. So the hammer, let me point out exactly where we are here. That's the hammer. Okay, so it's a chance to buy at a bottom. So people always want to buy low, right, sell high. Well, this is almost classic of that. Quite frankly, most of these are, but this is one of the most classic. In fact, it's probably one of the most commonly seen candles, quite frankly, when you see a massive correction that finally ends. If you think back at and go back to charts, when the bottom finally hit March of 2009, when you go back to prior corrections that we had that were pretty sizable, more often than not, you see a hammer somewhere near that bottom, if not at the bottom, within a few days of the bottom. And they're very commonly seen there. That's not the only place you will see them, but you will commonly see them on a very strong reversal when things are finally ended in the downtrend. So it's a single candle formation, meaning it's just one, but obviously it's relative to the ones prior because it has to occur in a downtrend. Okay? It's essentially identified as a small real body. It could be either green or red, or for others it could be white or black. It doesn't matter what color it is. But what matters is the size of the body relative to the size of the shadow. The shadow must be at least twice the size of the real body. Otherwise, it's not a hammer. And some people might want to call something that looks, maybe it's a 1-to-1 ratio, a hammer. It's not a hammer. A hammer has to be at least twice the size. And ideally, no or maybe a small upper shadow only on the top side. Now, when it comes to trading, if say you were to enter a trade off a hammer signal, your stop essentially, or the support area, the stop area, would be considered the low of the hammer. So if you're going long something and it reverses, then you exit the trade, you're out that trade, you're wrong the trade when it closes below the low of the hammer. Pretty simple, right? So that's how that works out. If I'm recording this, am I making this available to be seen? Yes, I am, absolutely. This recording is being done. It's also going to be available in the regular coaching area likely, or we're going to make a special area. I'm not sure. Kevin, maybe you can think about where you might want to put this later, and we can let them know by the end of the session here as well. Okay? All right, so that's the hammer in terms of its description. And so let's look at now, that's the hammer right there. So, right, did anybody really identify that? Could you see that hammer right there, right? It's a long, long shadow, very tiny little body on the top side, and it occurred after multiple days to the downside. Obviously, we had more days than that to the downside. We had a big up, we had a big down, and then a little slight up and another down. So this is enough of a downtrend overall, but certainly this downtrend right here is enough to call that a hammer in this case. So what's important? Remember what I said earlier, the importance of mixing, or at least combining, the Eastern with the Western, right? So essentially, when you see that there's support there, boy, this thing's going to bugger me up right here. There we go. Okay. So when you see that right there, and you see a hammer form, that's a good sign. That means that things are looking good. Now, hammers, generally speaking, could likely use some kind of confirmation. So did it really confirm the next day? Not really. And from the standpoint of a trade, is this a good trade to get into right then, right away? I mean, obviously you know what happened, but from the standpoint of really here, if you got in right after the hammer, where is your target really? It's going to be right here, isn't it? So is there really some good risk reward there? Ideally, you'd like to have at least a 2-to-1 ratio of reward to risk. And remember, I told you the risk essentially was the low. So if that's your risk and you're getting in here and your reward is right above, that's only about a 1-to-1. So by definition, truly, that's not a very good trade to begin with. So from the standpoint of just trade management, you wouldn't get into this trade anyway at the hammer. And what I talked about earlier was the fact that sometimes later it's a better confirmation, or at least it confirms the true support. Remember, I also said that the low of that would be the support area. Well, did it not find support here and then bounce again? In fact, this is another candlestick signal that it's actually considered, well, we're going to see that one later. In fact, we're going to see this exact slide later as a bullish piercing. So that's another candle signal. So you've got 2 candle signals provided within about a week and a half at the same support level, and then a bounce. And then again, is that a good risk reward? Probably not, but ultimately it does break that level, doesn't it? And so you've got a lot more confidence right now to consider a trade from on the breakout after a good bullish support area to go maybe into this area, which is exactly what it did. So the trade might not have been ideal at the hammer nor at the next bullish candle, but actually later, days later, when there was actually a better risk reward and trade management strategy behind it. So it was helpful to, 1, identify it. 2, it allowed you to stay out of the trade but also identify a trade in the future. And it also gave you an actual box formation of a measured move that you would have been looking for to the upside, which it met exactly perfectly with the prior high. So from that vantage point, everything worked out beautifully because you were able to not only read the support but also read the candlestick formations and then the eventual breakout as well. So to me, ideal situation, ideal trade, and ideal situation. All right, so let's move on. Do you see a hammer here somewhere? Where's the hammer? Anybody see it? You got it? You got it figured out? You know where it is? Right? Did everybody think that? Is that what you saw? Okay, so there's the hammer again. Long, long shadow, a small real body. And then the other thing to think about here, as I mentioned before, it has to be twice the size of the body. But also, as I mentioned earlier, the size of the shadow makes a difference in terms of psychology. If it was just twice the size of this real body, would you think of it as much as you would what it looks like right now? This shadow right here is what, 6 times? 4, 5, 6 times the size of the body? Would that be more significant in your mind than not? And it should be, because that was a drop that low, and the bulls absolutely with a major force brought it all the way to the top. What would make it even more convincing than that would be if it was a green real body. That's it. That'd be the only difference. Either a longer shadow or a green body would make it a little bit even stronger than what we're seeing here right now. So again, nice confirmation on the next day, but notice the trend as well. Keep things in perspective and context. Look at the trend that it was before. Do you think this thing is going to turn on a dime and just race up higher, way up to the upper limits? It's not going to do that. It's just coming out of a downtrend, so naturally it's going to have some kind of a short covering. It's going to be a strong rally, which at some point will fade, go sideways, or come back, possibly retest the lows, and which is what it did. And consequently, once again, you ended up with a retest of the lows of the hammer, and you ended up with, again, another bullish candle. That very large green candle you see before the major rally, that's a bullish engulfing. So that's another candle that was confirmed at the same level. And then again, your target would have been, the first series of highs initially. But then, of course, on a break of that would have been, again, another measured move to the upside as well. So very strong move here, but certainly well confirmed here as well in this diagram that we're seeing right now. So there's your support area right there. Right? There it is. So you found the support, there's the bounce, there's the trade, there's the identification, the confirmation. It confirmed it the day after the hammer, but certainly further confirmed it again. And this is the kind of stuff you might be looking for in terms of scans or identifications or watch list picks in the future. You see something like this and you say, oh, I missed the move. Well, maybe not. Maybe you're looking for the next move, or you're thinking, well, that was a pretty ugly downtrend. Maybe at some point this thing comes back and retags or retests the lows, and at that point it becomes a better trade. Now I'll tell you that it doesn't have to come all the way down to the low. It could be probably pretty much midway point of the shadow to the downside. Anywhere in here would have been a reasonable retest of that support area, okay? Just as a point of reference going forward. All right, what's the next one? So let's take a look. Where's the hammer? Do you see it? Do you see it? Do you see it? Okay, there we go. So there's the hammer right there. So that's pretty obvious, right? Essentially you've got, again, a long, long shadow. You've got a tiny, tiny little body. So that's clearly, this is like a doji, classic doji, long-legged doji for that matter, but essentially a hammer formation. And then you've got the confirmation that goes higher thereafter, right into the highs, the prior highs that occurred, that prior pivot area that occurred, and tagged it perfectly. It reversed back down again, back to the support area, formed another bullish signal off those lows. That's called a bull sash. It's even stronger than some of the other ones we've talked about from the standpoint of progression. And at that point, really catapults. And the other thing that you can see, ultimately, of course, we've drawn trend lines over many, many years, haven't we? That trend line ultimately was broken as well with really good support in here, naturally as well, right? Very, very good support. Okay, I've got a couple of questions here. It says, will I enter into a trade once follow-on candle exceeds the hammer high? Okay, so that depends. That's a great question. That's a great question. There's different ways to go about this. So let me reiterate the question again. So once you see the hammer, at what point, in other words, what point do you get into the trade, right? That's what you're saying, right? when you enter into a trade, once you follow on a candle exceeds the hammer high. So at what point? Is it only when you cross the high of the hammer or not? That really depends on the style of trading that you are like. If you're an aggressive trader, then you're getting in on the first side of a hammer, or the day when it closes, or near the end of the day when you see that hammer forming. An aggressive trader, an extremely aggressive trader, is doing that during the day when he sees the hammer, thinking, that's it, that's the bottom. I see the volume surging, it's massive, and I'm going to get in now. Okay, that's what an aggressive trader does. All the way in terms of a gamut or prism of individuals, that the more conservative trader would say, no, I'm not going to budge yet. I'm going to wait for a confirmation. That confirmation needs to be ideally a bullish candle, meaning a green or a higher close. A close higher would be your ultimate confirmation on a hammer. Hammers typically need confirmation, and confirmation can come in different ways. On this particular example of a hammer, right here that we have outlined, this one, since there's no prior support that we see here, then you'd need a confirmation candle. Now, we don't know if there's a moving average here. We don't know if there's maybe a prior low. We'd have to look back, obviously, in time, or maybe use some other Western indicators as maybe some other indication. Maybe others might use Bollinger Bands with an RSI or a stochastic that's oversold. Maybe that's what you want to use as well. So it depends on what your trading style and what methodology you use. And I can't tell you what you have and what you use and what's best. I've had that question asked me so many times. What's best? What's best is what works for you. And I don't know what that is. Honestly, I can't tell you that. And if you don't know, then all I can do is suggest you try some things, come to the coaching, maybe we ask some questions, maybe we go over some stuff like that and we can review it. And then maybe you start practicing and trying stuff out, and then at some point you find something that you like and you go with that. Okay? So from the standpoint of the more aggressive just gets in, to all the way to the most conservative would wait for some kind of a close above. So anything in between there would be you're getting in right away to just on a cross of that the next day to a close above that as well, to including, as I said, any kind of Western indicator as well. Okay, hopefully that answers it. It's not a vague answer. It's really depending upon what kind of person you are. What kind of mentality do you have? Are you a real nervous trader? Are you always looking for that? Are you kind of slow to act as well, and you're looking for more confirmations? The more confirmations you feel you need for confidence, then the longer you're probably waiting. Okay? So know that also in some events, if the longer you wait, it's possible that some of those trades then may not have a risk reward. Okay? And that's okay. So in some cases, you've lost the opportunity, and that just comes with time. You recognize it, you notice what the parameters were around that, and in the future, maybe you're comfortable enough to try entering sooner to capture the trade sooner. That's up to you. Sometimes it feels good to do so. Sometimes it doesn't feel good to do so. And you'll learn. I suggest you paper trade a lot. That's the best way I can do it. Is there a second hammer midway between the retests? Was that on this chart, Mike, or is it on the prior? Is there a second hammer midway between the retests? As in right here? If that's what you're identifying, past one. Okay, so maybe I can go back to the prior slide here. That's the one, right? Is that a hammer? Actually, it's not a hammer. Great call. Thank you. This one right here. By its mere configuration, it looks like a hammer, doesn't it? But because of the trend, it's not. It's not enough of a downtrend. The downtrends, quite frankly, are, I don't want to call them proprietary necessarily, but based on the software that he's designed, there's proprietary parameters and calculations to identify what a trend is and whether it's a downtrend or an uptrend. In this case, the software did not identify this as a hammer. I can tell you that now, because it did not identify this as an official downtrend. Now, you may say, that's enough of a downtrend for me, and that's enough of a hammer-looking idea for me also. But my only question to you is that, okay, if that's a hammer and you're thinking that's a downtrend, what other Western indicator are you going to use to confirm that if it's not going to be the follow-up candle? So if you don't have a Western, then you're probably waiting for a candle. If you're waiting for a follow-up candle, you've got no trade because now you're at resistance already, right? There's no room. You're entering here, and your stop is down here, and you've got no room to trade. Make sense? So it's a bad trade anyway. So it depends on what you have as a parameter that might say, oh yeah. Otherwise, you're just an aggressive trader, and you're getting in, and you're crossing your fingers. If you're an aggressive trader and you get in, that's fine. You can do that. That's your prerogative. I'm not saying it's good or bad. It's neither. It's whatever you think is best. If you're getting in there, then at that point, yes, your risk reward is about 2 to 1, and you're fine. Make sense? Then you've got everything on your side. You got an easy 2 to 1 parameter there, and away you go, and you've got the trade, and you'll feel brilliant. But again, that's the aggressive trader who may not necessarily be looking for all of the confirmations necessary. In my opinion, and at least what I've seen, as well as the guy who brought this to North America, Steve Nissen, doesn't trade that way. He doesn't. He's not an idiot. He was an institutional investor. He traded lots and lots and lots of people's money years past. E.F. Hutton, Merrill Lynch, and I think there's one other one that he worked for as well, but I can't remember. And he was a consultant for institutional investors and still is as well. In fact, institutional investors seek him as well as use his software as well. And he doesn't trade that way because it just makes common sense to have more parameters and more confirmations before you enter a trade, right? It just makes sense to have the more odds in your favor than not. You wouldn't just go to the casino and go, I'm just going to throw my money in there and just go for it. It doesn't make sense. You just wouldn't do that. So my thoughts is that you probably wouldn't do that here either. But great call on seeing that. I appreciate the fact that you saw that and you asked about it as well. How do I read it? 220. Okay, that's probably the next candle I'm thinking here. Let's see here. 220. Yeah, there. That's again. That's pretty much the same kind of question from the last slide. Is that a hammer? Looks like a hammer, right? Based on design, but not enough of a downtrend to truly be identified as a hammer. Okay, there was a big uptrend, and based on parameters, really not. But what you also saw, this is the other point. It's not a hammer, but what do you actually see here? What you see is big shadows. Right? Here's support based on a prior resistance. And you see a lot of support there. So that, to me, even though it's not a hammer, what you're seeing is a lot of forceful bouncing and the psychology of the bull saying, we are not going down, we are going to push up. And they continue to do that for 3 straight days right off the $2 mark and then took it higher from there. And that's how you interpret that. That's a great call there as well, Francisco. Nice one. Well done, eyeballing that one as well. Does that make sense? Let me see if I can clear this this screen here a little bit. There we go. Okay. So you see that now? You see the shadows. See that? It says a lot in itself, right? And it's kind of the same thing that you see a little bit right over here, just a little bit, all the way across there, just a little bit. But certainly across there, and it happens to coincide there. That seems to make a lot of sense, doesn't it? So good. Yeah, very good. Shadow not long enough. I'm not sure which one you're talking about there. This one I pointed out earlier, shadow not long enough on this one for sure. This one right here. The body's too long relative to the shadow. That cannot be considered a hammer for sure. The others, yes. But, okay, good. So good. We're making some progress. I hope that helps. See, I think we got a pretty good lesson just in that alone right there, right? I'm spending a lot more time on the slides than I ever thought I would tonight, but I think this really sets the stage for the coming slides and the other things we want to look at as well. So I think you get what I'm saying now when I say the candlestick really gives you the psychology and what's going on, not to mention the fact when you start looking around and seeing other Westerns, like when you see just a pure level of price and supply right there, that's support. Now add the fact that when there's maybe a 20 moving average or a 50 moving average or a 200 moving average, that institutions are using that same stuff and they're looking at them as well. And when you start seeing action at those levels, you're not the only one looking at them. Somebody else is looking at them. So it makes sense to use things that others especially institutions that are using them as well. If they're looking at them, then good for you for looking at them as well, because you're seeing what they're seeing. And I believe that, quite frankly, when you're looking and using candles effectively, you're really getting a step ahead on most. A lot of other individuals are using indicators and they're waiting for crossovers. They're waiting for the indicator to tell them what to do versus the price action and the sentiment and the psychology, and letting the indicators confirm but not necessarily tell you what to do. It's not the indicator that should be telling you. That should just be there to help guide you and confirm things. That's all it's for. All right. Let's see. So we've got the hammer done. Wow, cool. Next, shooting star, the opposite, if you will, the brother of the hammer. So same thing, single candle formation. This time formed on an uptrend. Again, potential reversal, but this time at a top. And once again, small real body. Virtually no shadow on it again as well. And again, the shadow must be twice the size at least of the real body. And again, the resistance in this case, the opposite of what we have with the hammer as support, the resistance becomes, of course, the high of the shooting star. Right? Make sense? Okay. So do we see it? Do we identify where are the shooting stars? How many are there on the screen? I'm going to give you some time. You don't have to write anything unless you want to write something. Go ahead and write something in the screen for them so I can read it. Okay, somebody said 2. Somebody else said 2. Okay, well, I'm just going to show you one, quite frankly. I'm going to show you that one because that's really truly a top, right? That's really very much at the top. Now, where you're saying maybe 2, you're probably noticing maybe this one. And there might be enough of an uptrend there that probably yes. This one probably not, because it's probably not enough of an uptrend either. That one may be. I don't recall exactly what I identified in terms of what was before here after as well. I don't recall what happened. If it was a downtrend first or if it was fully an uptrend, I don't recall. But I do know that what I was trying to focus on primarily was the one at the top. Now, let's start with the one on the left first, though. Assuming this is a shooting star. That is a reversal signal from a top, okay? So it also, just like a hammer, could use a confirmation, right? So it did get its confirmation the next day. But keep in mind also, which direction is this in? So this is an uptrend, right? There's an uptrend going on here. And if that's a reversal, then, how violent of a reversal is it? How bearish is that shooting star really? And how do you know that? How do you know how bearish it is? By the shadow, right? By the longer the shadow, the more bearish it is. The more they're saying, no way we're going up here. We are taking this thing down. You are not going any higher. So compare this one to this one. See any difference? Big time, right? Even though this one up here, the top is green, and this one's red, the one at the top clearly says, I am more bearish. It went sideways for a while. It was very undecided. It's going, it's digesting a lot. They attempted to take it higher, and they said, no way. And then, really no true confirmation yet. So this is live. I just took this out here. I'm trying to remember what this is now. This is a currency. It might be the British pound, I believe. I think. I can't recall. But anyway, this was taken just a couple days ago. And so I don't know how this is going to turn out, but I believe it's turning out to be the downside. Because, again, the bearishness is clearly there. That's the one I want to identify the most. So that one is clearly more bearish looking than the other. And then, again, if it goes higher, so if you're in this trade now, right? Let me see if I can somehow, goodness gracious, I'm trying to get rid of the writing on the screen. There we go. Okay, so if that, in fact, is a reversal, you see my cursor? If that's a reversal, if it goes higher, right, are you right or wrong in this trade? Initially, you're right. You're going short. The target would be somewhere in the lower portion down here, and your stop is the high, so you would simply reverse course. As soon as it breaks the high, you can choose to exit the trade, or quite frankly, you reverse the trade. That's the one thing about these candles, in my opinion. You learn to truly be a chameleon. You don't say, I'm wrong, although it is wrong. The short position in this case would have been wrong, but the right direction or the right trade ultimately would have been a long position. And simply by crossing and closing above the high of the shooting star, this turns into a long position. So it goes from a short and you reverse the position into a long. It's something that I never did before. I never considered it. I was so set that this was a short and that's it, that if it failed, it failed. I never even considered that it would go the other way. And then I'd watch it go higher and higher and higher and higher and higher, go, oh man, I can't get into that. This was a short before. I can't believe it's a long. Well, the trend was up to begin with, was it not? And this was just simply a blip that gave us a head fake that eventually continued in the same direction it was going before. That's it. And so that's the one thing, and one of the many things I should really say, that I've learned to be able to adapt and simply not get stuck and emotionally attached to the fact that, yeah, that was a short, and I have no problem if I think the parameters dictate that the trend is still going up, that I will reverse this in a heartbeat and go long. No problem at all. So think about that. Think about what you guys are thinking about when you do your trades, and if you have the same mentality that I used to have, and chances are you do. Because when you see a trade that's long or short, that's usually where you're stuck at. And honestly, it's one of these, like for instance, when you see this trend going higher, and you see how strong that is, and you see this pause, doesn't that just kind of look like just digestion, a consolidation? That initially you're not thinking bearishly, you're not thinking this is going to be a short. And if it is a short, you're probably thinking short term, you're not thinking long term. That a lot of people, quite frankly, view this bearish signal as an opportunity to go long, not short. They're waiting for this thing to cross the high and they immediately go long. So go figure. It all depends on the trader and the perspective that they have when they're viewing this sort of thing. So I hope that helps, because to me that was an eye-opener, in my opinion, with respect to that. So realize that you can go however way you want to go. Now note also that at that time when this hit the high, that's why this to me becomes an even more important bearish signal, is the fact that it tagged to the penny the April 30th, 2012 high that occurred earlier in the year. So when you, again, combine a Western with an Eastern, there's that much more meaning behind the candle at that point. Okay, makes sense? Okay, so let's move on. Shooting star, here it is again. Okay, let's take a look. What do we see? Where is it? Can we find it? Is it on the left side of the screen? Is it on the right side of the screen? R for right, very good, okay. More to the right, okay, so more to the right means that you're thinking the left one is actually maybe a shooting star as well, but more likely the right because you see more of what's going on. Because on the left side, you don't really know what happened before, and I agree. But I tried to hone in on some smaller errors to see the charts a little more clearly. And quite frankly, sometimes that's all you really need to look at. You need to be able to see a perspective of what's happening now as well as what happened before, but really what's happening now. So yeah, very good. Thank you for that. And we've got that one right there at the top. And again, you've got that same resistance that occurred. So you've got that huge spike to the upside, and then you had this sort of sideways action for quite a while. These candles, I believe, as I recall, are daily candles on this one. And so you have, several weeks, a month almost went by here, and it went to retest the highs and demonstrated doji, shooting star, spinning top, nothing, and then another, high wave candle, and then boom. And that's the other thing I may want to point out as well. The more times a resistance like this gets tagged and is not broken, the less likely it's going to break through. Okay, so if it tags and tags and tags, and the more bearish signals that show up, the more long shadows that show up, the less likely it's going to break higher, and the more likely it's going lower before it goes up again. So you had the tag, you had the other tag, and you had a shooting star, and then boom. So if you were thinking short and you got in based on the confirmation the day after, you would have been very right 3 days later. And what would have been your target? Right? Your risk, right? Your risk is, and your stop loss is the high of the shooting star, essentially the yellow line, and your target is the low right here. So you get in here, so 1 day, 2 days, on the 3rd day, boom, you met your target, you're done. Okay, so we could certainly talk about trade management, but we'll leave that for maybe for another day, or for coaching sessions for that matter. But you didn't necessarily have to exit altogether here, but certainly profit taking for sure at a minimum, right? So good. All right. Good one there. Okay, so isn't the 5th candle from the left a shooting star, also the 5th in from the right? Okay, so let's go back again. Sorry about that. The 5th candle from the left, 1, 2, 3, 4, 5. Oh, that's a great question. Fantastic. I love it. Okay. Is the 5th candle from the left a shooting star? Also the 5th in from the right. Okay, good. Ideal. This is fantastic. I love this. So this one right here, right? Is that a shooting star? And is this a shooting star? Can anybody answer that? Murray? Excellent. Murray says no, it's not a shooting star because the trend is wrong. When does a shooting star occur? It has to occur at a top. That here is at a bottom. This is going down. This is certainly not a top. And that's why that is not a shooting star. It's a great question. It's not to make fools of you, of anybody out there. You go through, that's why we're going through this, is because that's why I wanted the interaction, because this is the exact kind of stuff that I wanted to have people ask. And this is how we learn. I went through the same stuff, exactly the same way. So again, remember the definition, right? Formed after an uptrend, just like the hammer formed after a downtrend. So when you're looking at this thing here, you're going, no, that shot lower, and that's not an uptrend, unless in your mind you think it's an uptrend, but that's not an uptrend. And certainly the one on the far left is clearly not an uptrend. So good, Murray. Thank you for the question as well. Yeah, you're not behind. No worries about that. This is why I'm doing this. This is why you're not the only one. I'm sure there's a lot of other people who kind of thought the same thing. Oh yeah, of course. And you're going to find times where you're going to scratch your head going, oh, wait a minute. Is that or isn't that? And you just have to think about the basics and the rules. And once you understand the simple descriptions and the basics, it all makes sense. It all makes sense. So remember, shooting star on an uptrend, hammer on a downtrend. Okay? Great. Awesome. Okay, here's another one. So I'm pointing it out to you right there, right? There's a shooting star. The shadow is very long. The body is definitely less than twice the size of the shadow, and you've got a little bit of a wick, a little bit of a shadow on the bottom side, but it's not very big. So this constitutes a shooting star as well. Is it at resistance? Would you consider that resistance? Would you consider that anything at all? That's resistance, and certainly it closed below resistance. It opened at resistance. In fact, it went higher and then faded all the way back and closed below. So initially it tried to break through and said, no way. Then it went back and retested it 3 days later, and with a kind of a spinning top and a little bit kind of doji-like formation there, and then said and then collapsed. So how many times did it tag this 111.50 area from left to right? Take a look. Once, twice, 3, 4, 5, 6, 7, 8 times. Significant? So a lot of us might be going, well, this, we're going to wait for a breakout. We're going to wait for a breakout. And you're so busy waiting for the breakout, you're not reading the candles. And the candles are telling you, there's a lot of rejection here. You're seeing upper shadows from left to right. Look at the first 2 tags on the left side. Look at the size of the shadows. They're not huge, but they're enough to say they backed off. You see it again, mid-chart. It backed off, went a little bit lower, bounced aggressively into where we see the shooting star now. Now, that candle before the shooting star might say, that closed above the resistance. That could be a breakout. That's not a very convincing breakout. That's pennies beyond. That's not enough to say that's a breakout, in my opinion, at all. So I'd say no to that, quite frankly. But certainly the day after with the shooting star, you're thinking, okay, now we're getting to be some serious rejection. Now we've been rejected, 5 times. That's say, okay, I'm thinking more bearishly than I am going long at this point, more bullishly. Okay. Okay, I'm not going to mention your name, but good comment. These are good questions. Lots of us are just not brave enough to ask, but want the answers for sure. So thanks for the people for asking. You know what? Don't worry about the questions. This is how you're going to learn. So there's no dumb questions at this point, and this is why they should be asked, because as I said, initially there's myth that this is very complicated, and if we make it complicated, it's going to be complicated. But if you just, as I said, if you get the simple description, keep it simple, and it's actually simpler than you think. Keep it simple, and then just go with the basics. You'll be doing real fine, just fine. So yes, so thank you for that as well. How do I read the left side bounced upward? Well, I don't have any context for what that was on the left-hand side there, so I can't answer that question. He's talking about this whole left side here. And I know you're saying, well, wow, look at that. There's a big move. I don't know what happened prior to that. I'm not concerned about that right now. So I don't know what that is and why it happened. There's nothing there other than the fact that you have a series of candles forming lows. So chances are this was coincidental with something prior. That was likely support, a moving average, something of the sort. But essentially, in terms of was there a bullish signal? Well, there was a support area and there was a gap higher. So the closed lower, gapped higher, that's called a bullish separating line. Okay, that's a bullish separating line, and it's an extremely aggressive, extremely bullish move, as you can tell. And so long as you've got a risk reward that makes sense, it's a trade that you might consider. So you would have been looking for some potential profits in here or a possible target. At the point when it got there, there was no candles telling you to sell. There was no candles telling you profit taking. There was no bearish signals there. So you could have easily hung on. You could have peeled off maybe a third or a quarter because there was nothing telling you to really officially exit, right? So you could have hung on and you would have been looking to go all the way to the top. And perhaps this was also prior resistance. I don't recall either, but essentially that's a little bit outside the context. Must have been on news. Quite frankly, I don't care. No offense to the comment. Must have been on news. Probably, maybe so, but quite honestly, I've seen stuff that occurs without news as well. And quite honestly, again, how much do people know really that the news is there? Is there really insider trading? There is, isn't there? We all know there is. We all know people know information and that it's going on all the time. How come people get into trades far before it? How come we can actually sometimes read it in the candles before the news comes out? Right? How come? We can see this stuff. We can see the candles forming a support area, that it's building momentum. We can see the Bollinger Band squeezing. We know something's coming, and then all of a sudden a news item comes out and boom. So personally, I don't listen to any news at all. I have nothing turned on anymore. I used to have the TV on in the background, nothing. I don't look at anything. I don't read anything. All I look at is my charts. I don't even look at earnings anymore. I've traded stocks I didn't even realize had earnings the next day and traded fine. So a little scary, but the ones I will watch are going to be some major moves, like for instance oil futures. Now that I will look at the inventories and I will wait for that moment, because that can be that's a little more. That's a little more. I mean, obviously the moves are outrageous. Okay, every penny is $10 per contract. So this moves very fast and very aggressively. Like today, within a matter of 10 seconds, there was a $1,500 swing. It went 700 up, 800 down. I mean, when I said 700 up, 700 back to zero, from zero to 800 below in like 10 seconds. So those are the kinds of things I'll watch out for. But for the most part, everything else, I really don't. And I quite frankly, with the rules in place with the support areas and the stops and so on, things work out pretty nicely. In fact, on that oil trade, I went long, and I immediately reversed it on my support with twice as many. So I was one contract up, and I was one contract down. And I closed it, and I actually, within 10 seconds, I was actually even. It was pretty amazing. So I said, okay, I'm done now. This was a little too wacky. I'm out of this thing. I'm done. Anyway, I digress, and I now move forward because I don't want to move too far away from the content of what's going on tonight, as much fun as I'm having, and probably you as well. So no offense to those who watch the news. You can do whatever you like. If it works for you, great. I've moved away from it. Okay, so let's go on. Now we're going to go to the piercing candle. You can see why I only picked so many candles tonight, right? Because we're only we're only a third of the way through. And I'm going to move faster now, so because it's time. All right, so piercing candle, you can see from the diagram, again, bottom reversal. It's a two candle formation this time, not a single candle formation. Again, formed in a downtrend. It opens lower, so it gaps lower than the prior close, okay? Possibly gaps below the low, which would be even better, and then closes at least halfway up the prior candle. So you can see the line there. It has to close beyond the halfway point. Okay, so the lower it opens, the better, because obviously the stronger the thrust back higher. And so, but certainly can open below the close. If it opens below the low of the prior day, even better. And of course, again, the support area, the stop area, if you will, the lowest of the two candles, whichever has the lower low, that's your stop. Okay, that's how that works. Okay, so here we go. What do you see? Do you see anything? Remember, we're looking at a piercing candle based on the definition. Is it on the far left? Is it the next one right afterwards? Is it somewhere in the middle? Right there. Far right. Very good. Well done. So you see how it gaps way lower and then closes beyond the halfway point of that candle. And then again, I'm going to point out where did you identify this candle? Where did it happen? At a support area. So that's where, again, the added confirmation that's there. The added, now I don't know if this is going to go all the way up and higher and so on, but certainly in terms of a trade, something that you say, yes, I now want to push the button, that's where you want to do it. Now on the far left, where this, the goal line started, that's also a bullish reversal candle, okay? That's called a bull sash. I mentioned it earlier. That's even more aggressive. That's an even stronger reversal than the one we're looking at now, the piercing. It's stronger. Why? Because it gapped higher, not gapped lower. But again, the risk-reward shifts things quite dramatically as well. So that's going to be for another day, another time, possibly, if we do it at all. So certainly if there's demand to go through some of the other candles, then by all means you need to let us know, and we'll charge you $1,000 for that event. Just kidding, just kidding, just kidding. Okay, so there's that. There's your support. There's the obvious move, and here we go. Here's another example. Okay, do we see it? Where is it? How many are there? Do we see one? Do we see two? Do we see three? Do we see none? I'll give you a few more seconds. And then I'm going to ask you also, if you see it, okay, somebody says one, somebody else says one. Good. And then, okay, so for those of you who see it, how strong, based on what you see, how strong do you think it is? And again, we talk about, earlier on we said the size of the body makes a difference, the size of the shadow makes a difference. So based on where it is, how it happened, and how the size of it all, how strong do you think it is? Okay, so with that, we move forward. And we see that that's the one we're talking about. In fact, this is the one I talked about earlier. We saw this is the same slide we saw the hammer at the very beginning of the broadcast. So how strong is it? Well, it's pretty strong. It gapped lower and it gapped, opened below the low of the prior day, and it finished, within the halfway point. And just so you know, the higher it closes, relative to the open of the prior candle, the better, right? So it's got to go at least to the halfway point. And anything from that halfway point all the way toward the opening price of the prior candle, the stronger it is. Certainly the fact that there's a shadow above doesn't really help, but the fact that you've got multiple levels of support, the fact that it went beyond the 50% area should be good enough. Doesn't really matter. That now becomes an opportunity to consider a trade. Just as the hammer was, this is even better because the hammer didn't give you the next day confirmation. This is. So you're getting in right away as an aggressive trader. Your stop is right below where the goal line is, essentially the low of that piercing, and then you could get in right away on the next day. And your target ends up being, exactly what I talked about before, which are the series of highs. Or you're waiting for that to break the highs, in which case then you're going to the next target at the next level again. All right? Make sense? Cool. All right, here's another one. Anything? Anywhere? We're still talking piercing candles here. We're not talking random. Yeah, so from the prior slide, strong because of the support. Yeah, very good. Fairly strong because of support levels. Yeah, exactly right. Very good. Excellent answers. I like it. Good, good, good. Okay, so do we see anything? A little tougher, right? Probably. A little tougher. So that actually truly is a piercing. It's right at the halfway point. It is a downtrend because it was actually enough of a drop, even though it was a couple of days only, it was enough of a drop to make this a downtrend. I mean, think of where it was and think of where it ended. That's significant enough to be a downtrend already started. But where is it happening? Also, same thing. And note also that you've got another one right there. It's kind of tiny. You got a long shadow above, but that actually is right at the 50% mark as well as a bullish piercing. Doesn't look as convincing, but it's more convincing because it's happening what appears to be at a point of support. Now, does it ever actually pan out? Does it ever actually, if you got in, does it ever actually work out for you? Going long, it does not. Now, remember what I talked about before? If you had the sense to say, okay, I'm going long, but it failed, and now I'm going to go short. If you changed and reversed course, did that trade work out for you? It absolutely did. It absolutely did, right? So if you got in and your stop was right here and you reversed course right there, your stop now for that purpose would have been, on the upside, would have been up here somewhere, higher, okay, slightly higher. You would have actually reversed course and it tagged and came back down, and your short would have been a brilliant short. So that's the beauty of, as I said before, being able to be a chameleon, being able to be an individual that can adapt to the markets and change course if you want to, if you need to, based on what you're seeing here. So there's clear resistance here. There's a possibility of a rollover this way as well. There's a trend coming this way. You might have constituted that as a descending triangle, perhaps. All depending on what your perspective was, but nonetheless, had you changed course, you would have been fine. Is the piercing candle more than halfway up the body of the previous candle? Yes, it is. It actually is. I know that because the software identified it for me. I wanted to make sure, and I confirmed it. It's no lie. It actually is. It doesn't quite look that way, but it actually is. Trust me there. And I know you will. All right. Let's move on. Dark cloud cover. We're moving right along now. Okay, so description for it. Again, it's a top reversal once again, right? It's the opposite of the piercing. It's the dark cloud cover. I mean, just think of the terminology that these wonderful Japanese came up with. They had such great descriptions of their terms. Like the one that I don't have listed and talk about is the harami. The harami is an inside day, just as an example. It means pregnant person. And it just makes total sense. You've got this little candle on the right side of a large candle, and it looks like a person standing there with a little belly sticking out. It's brilliant. This is a dark cloud cover. Makes sense. It gaps higher. It's coming down. It's a red candle. You got cloud cover. over top of the bullish nature of that trend from prior. So you've got a top reversal. It's a two-candle formation once again, formed after an uptrend. Once again, it's got to close at least 50% into the prior candle. And again, the resistance area will be the high of the two candles, whichever is the highest high of the two candles. Right? Okay, here we go. How many do we see here? 1, 2, 3. How many? So I'm going to answer that question regarding the software in a minute. I don't see the gap higher part. Okay, very good. Great question. I'll point it out. So somebody's saying 1. They're only seeing 1. Got it. Okay. Okay, so let me answer the first quick question here regarding I don't see the gap higher part. Okay, so let's point this out. Let's use this one right here. So you see this green candle right here, right? So it opens here, closes here. So the red candle where? It opens higher. That's a gap higher, right? So it closes. So if it goes up, closes, and opens higher, that's a gap, right? It didn't open right at the same price. It gapped higher and then faded lower. Okay, that's the gap. So there's no gap in terms of a space. What there is there's a gap from closing to opening price. That's the gap. So it gaps higher and immediately fills itself, obviously. Hopefully that's understood there. Okay. So somebody said 1, somebody else said 1, and then somebody says, okay, good, they got it. All right, good. All right, so let me, and I'll get to that other question regarding the software in a minute. Okay, so let's talk about right there. So that's really the primary one we're talking about because there was initially enough of a downtrend here with the reversal that there was not, this really didn't constitute a true, not to mention the fact, where did this close? It did not close halfway, right? It did not close halfway, right? That one there is not, it gapped higher, but did not close halfway into that candle. So that is not. Neither did the one on the far left. It did not close beyond the halfway point either. This one did. Okay, good. So there it is. And we have a series of highs. Oops. There we go. We have a series of highs that were formed right there before as well. So there was that. There was the move through the breakout and then the immediate reversal, and you're looking for the target down below. So, okay, cool, cool. All right. Where is it? Where do we see it? So while you're looking for that, I mentioned software. So somebody asks, is the software you're referring to, does it identify these formations for trades? Yes, it does. In fact, it's customizable, meaning that you've got all 28 signals I just mentioned, and you can say, I want to see them all, or I only want to see 6 of these signals, or I only want to see 12 of these signals on my charts. And as they appear, as they form, they appear on your chart. They make the software for Ninja Trader. They make the software for Trade Navigator, Trade Station. Those are all for primarily equities. They do make it for Forex currency traders as well on the what's called the MetaTrader 4 platform as well. But the first 3 I mentioned are for primarily equities. But you can use currency on those same platforms as well. You still trade currency on TradeStation and Ninja and so on as well. But yes, they do. So midpoint, near the middle of the chart is what everyone's kind of saying here. Yeah, okay, good. Let me carry on here. So there, we've actually got more than one. We actually have 3. So note the one because there's an actual uptrend that occurred. You may not have thought that that was enough of an uptrend, but there was enough of an initial trend that pulled back and then the big surge higher that was actually enough of an uptrend. You think the lows are going higher and some of the pivot highs are going higher as well in that first one. So clearly, and that does close beyond the midway point. The second one is also still considered at a point of a trend and high point. and also, of course, meets resistance and does close at the midway point. And the third one, mind you, as small as it is still obviously at the point of a high trend, and also closing midway point, beyond the midway point of the other one as well. So there's no question. And then you got resistance all the way across there. So as the first one forms, no big deal. But as the second one forms, now you've got some resistance that seems to be cleared. Of course, by the time the third one forms, now you've got a clear level of resistance that's identifiable. Okay? And so there's more and more reasons of potential short opportunities. But again, as I mentioned earlier, being the chameleon and being able to adapt, this actually turns out to be a pretty darn good long. Note the strong uptrend that occurred prior to that, right? Let's not forget what happens in context. It's the context of what's happening as well. Note the huge bullish run. Green candles all over the place. That doesn't necessarily guarantee this is going to go higher, but certainly that tells you something. Look at the nonsense through here, the choppiness through here, and of course comes all the way back down. This just goes zoom after tagging support, and then pulls back probably on some reasonable percentage retracement, and it absolutely blows through right afterwards. Closes above the high. Well, it probably closes right at the high or right slightly above the high of that in terms of your stop. Gaps higher, it carries on higher again. So why not the fourth from the right? The fourth from the right. So this one right here. Good question. That may have been one. It's possible. I don't recall. Good point. That may have been one. I don't recall. I would think that was enough of an uptrend clearly to say that should have been. That probably was one. But for the sake of, well, we'll say it is because it is. That is a dark cloud cover. Okay, so now with that in mind, is that enough to exit the trade? I guess that's the question now. So if that is a signal, and it is a signal by the way, would you exit the trade or simply take profits based on that signal? And did you get a confirmation the next day that that was in fact a dark cloud cover? Okay, so did I ask the right questions? And you have the answers. Make sense? You follow what I'm saying now, right? So you're looking for a confirmation. What is the confirmation? So is there resistance? No. Is there a follow-through declining bearish candle the next day? No. So you either can consider right away the next morning going, wow, this thing formed. Now tomorrow I got to see what happens here. So you've got two things really to think about. One is what's the candle the next day going to do? And two, you've got this big gap right here. That's support now. So that's kind of like the other place where you can raise the stop to as well. So you've got a stop area right there. You know, that's a target, in other words. That's kind of like the target area for your short trade, if you're thinking that, or the possible area for support for a bounce back higher. So there's no candle confirmation for bearishness, and you got a support area right below as a potential target for your short anyway, which is really bad risk reward anyway. So at a minimum, you might be considering profit taking, and at no point did you ever actually need to exit completely because there was really not enough there to confirm anything. Make sense? I hope so. So I'm going to leave that and I'm going to move on. So if you got anything you want to add to your question and based on what I answered, at least give me a sign that you understand and that you get it. Because if you don't, this is the kind of stuff we talk about in coaching all the time, right? So for those of you who aren't in coaching, strong suggestions here, right? Very strong suggestions. Consider it strong. Okay, let's move on. Dark cloud cover. Where is it? Do we see it? Well, lo and behold, I've got it identified here at the top with my, that's what the software looks like. And I guess that's why I left it in here, as I remember. Because I want to point out, this is the abbreviation form. It also gives you full out language. It'll actually read dark cloud cover. This is the abbreviation. It says negative DC, meaning bearish dark cloud cover. So it actually tells you that's what it looks like. So there it is, point blank. Pretty obvious where it is, right? There it is. Is there resistance here? Well, there might be enough to say, based on price action, that there's resistance here. And maybe there's something from the far left that may be coinciding with it as well. But what you do have is you have a rising trend. And you do have a confirming candle the next day that breaks the trend, gaps lower as well. So you've got what's called a falling window, which is the gap lower. So you've got really strong bearish confirmation. Breaks the trend, gaps lower, red candle as well, of course, is a confirmation. So really strong confirmation that this is going to go somewhere. Now, obviously, the trend to the upside was quite aggressive. And so how much of a short might you anticipate? Well, you don't know. You never know how long the short will be. But obviously, if you've got moving averages on your screen, if you've got some other area where you think support will occur, those things are your eyeballs are pointing to. That's where you're thinking targets will be. Make sense? You're going to be thinking that's where you're going to consider taking profit and exiting only if you're getting a signal, a reversal, bullish reversal signal at that point. Okay? So, and what happened really? Did you actually get a bullish reversal signal? Is that a hammer? Is that a hammer? So, no, it's not a hammer. Remember, the shadow has got to be twice the size of the body, and it's not. So very good, Murray. You said no. And then somebody pointed out also the fact that the shadow here on the dark cloud cover certainly gives you a clue again of no way we're going higher. That's again more bearishness added to the dark cloud cover to begin with, right? Plus it's hitting resistance across the top. Make sense? So if you're going short, great. You're going short. It does all of a sudden, based on maybe this little cluster, maybe a moving average, I don't know what, but it bounces right here, right? So if you're short, at what point do you fully exit this trade? Is there a buy signal? Is there something that says exit completely? Where is that? We said earlier the high of the dark cloud cover is your stop. But once it gapped lower, it's the gap now that actually becomes your stop. So you can actually now lower the stop. And look what it did. It came right into it, found resistance, and immediately turned south. So if you had taken profit somewhere along the way but not fully exited, you would have benefited quite greatly. Greatly, right? Greatly. So would you have played it that way? I don't know. But certainly as you start to understand these, there's probably a reasonable probability that you could have read this that way and you would have benefited from that exact trade I just pointed out. Cool. This is fun already. I like it. So now bullish engulfing. We're down to our last. We're 66% through. We're going a little faster because you're starting to understand the principles a little bit better naturally. So here's the description. Similar to the dark cloud cover, similar to the piercing, but now it fully engulfs the prior candle. Major reversal signal again, comprised of two candles once again. They are opposite colored in this case, right? Red and green, formed on a downtrend. Again, opens lower. Ideally, if it closes below the low as well, even better. Similar to the piercing. But in this case, it goes all the way up and engulfs the real body, engulfs the prior real body. Okay? Exception to the rule is when the engulfed body is a doji or an extremely small body. That's the exception to the rule in terms of it's a little easier to understand at that point. The color of the candle, in other words, does not have to be red. The prior candle does not have to be red if it's a really small, tiny body, a doji, or it could be a really tiny green body. No big deal. That is okay. Why? Because note what it looks like on the way down. You have big red, small red, big green. So what happens is the momentum starts to wind down. The psychology is starting to shift where the selling is not quite as aggressive anymore. And you end up with that small real body. And then boom, a big green candle that engulfs it right away. That's the signal. Ideally, what you want, the smaller the real body on that first candle, the better. And the bigger the green body afterwards, the better. So that's sort of when you look at the variations, the scales of gray, if you will, of their variation of strength versus weak signals, that's it right there. The strong signal is going to be a big green body with a small real body of the day before. That's the strongest. The weakest would be where that first real body is kind of big, and the engulfing, the green one is almost the same size and just barely engulfing it. That's not as significant. That's not as convincing. Okay? Make sense? Okay. So let's carry on. So here's some other kind of enhancements to that. A large engulfing, a small, as I said, the smaller the better. The previous day showing the trend was running out of steam. The large body shows that the new direction has started with good force. The engulfing body, the green one in this case, more than one previous body demonstrates power in the reversal. If the engulfing body engulfs the body and the shadows as well, the reversal has greater probability of working, so the stronger the signal. The greater the open gaps, the lower, the better as well, right? Because there's that much stronger a reversal. They went lower and then really propelled to the upside. So those kinds of things are small nuances, but they certainly, again, they will tell you the strength of the psychology at the time, the stronger the reversal pattern at the time. Good. And I see that there was a question which I already answered based on the description. So yes, see, I'm already ahead of you guys. So good there. All right. So that, of course, will apply for its reverse brother as well. So here we go. Let's go to some of the examples. Can't believe what time it is already. It's amazing. Okay, do we see it? It's pretty obvious, I think, right? It's pretty obvious. So there it is, and it happens again, of course, at support, right? Happens at support, right there, boom. So again, gaps way lower, and then propels way higher. Now, what could have made this an even stronger bullish engulfing? Because that's pretty strong. It gaps way lower, it completely engulfs it. But what could have made it stronger? What could have made it stronger is if it closed above the previous day's high, where it completely engulfed the full candle, including the shadow. That would have been powerful. But look at the move it had afterwards. So you had support, support. It goes up a little bit, comes all the way back down, and then absolutely catapults. What market is this, by the way? Any idea? It's NASDAQ. This was the NASDAQ when we hit the lows here recently, when we finally chopped around forever and then finally took off to where we are now in terms of the highs. This was it. This is what it looked like. It wasn't a hammer, but it tagged, and eventually, boom, sayonara. I had a hard time believing this at the time because to me, if you recall, when we were going through coaching, I thought to myself, this is not to me capitulatory enough. This to me was not enough of a sell-off for me to believe that this was over. Well, I was wrong. And that was not enough understanding in terms of the candles at the time, like I do now, that this was a very strong signal of support and a very strong catapult of energy that propelled this. And this would have been tradable into the highs. And you see how it kind of bounced around there, formed a hammer, and then took off again. Boom. And just continued higher again. So there we go. All right, here's another one. Okay, I know it's getting late, so people are actually leaving because it's probably late for them as well, so I'm going to start advancing a little faster. So there's your support area. Oops, sorry about that. There's a support area. And the bounce, aggressive. Now, tradable? No, not tradable. Why? Because you're right into the resistance area, right at that 102 area, right away, right where that area, that line of resistance is right away. So, boom, You're at resistance. So you're trying to enter, you got nowhere to go. You have to wait for the breakout and then eventually sort of to test this area. You have to wait for the break and the test. Then you would have got in on the bounce on this candle right here or somewhere in here. And at that point, you would have been going into some prior high up here somewhere. Okay? So that's the trouble as you have some of these very aggressive, very strong candles. Sometimes there is no trade. By the time you see it, by the time the end of the day is over, there's nothing to trade. You're too late. Did you miss out? Well, not really. Again, it depends on what kind of trader you are. You either were a truly aggressive trader witnessing these shadows below here and saying, well, there's support there. And on any kind of bounce, I'm going to get in. So the aggressive trader is watching their screen during the day, and they're going to an hourly chart or a 30-minute chart or a 15-minute chart. They're going, I'm looking for a bullish candle that's happening at the same time on the intraday, and I'm going to get in based on that and then trade this to the top. So that's only the aggressive trader who also watches their screen and goes intraday can do that. So did you miss out? Well, no, you did not really technically miss out. Now, you could have taken advantage of the breakout afterwards. So that's where you would have missed out maybe on this, but really based on your trading style and the way you go about things, you didn't miss out on anything, and you can't think that way, but you would have been able to take advantage of that area right in here, and then you would have been able to take advantage of the rest of the move. So you gotta keep that in mind. Okay, so another one. Right there, and then again support, right? So I'm giving you some pretty obvious stuff because, again, I want to show you when they show up, is there already confirmation? So again, when there's already a confirmation there, there's no need necessarily for the confirmation candle to show up the next day. That's my point. You know, there's a whole lot more we can be discussing and conversing about regarding confirmations. There's like hours and hours and hours of training that we can go through on this sort of thing. But I'm giving you the obvious stuff now. Now after tonight, you guys go start playing around with some of your old trades. Start go look at them. That's my strong suggestion to you. Go back to your trade journal. Go back to the trades that you did and go look at them. When did you enter and why did you enter? What did you see and what do you see now? And do you see anything differently? And would you have done anything differently? And you're going to find it fascinating and say, oh my God, what was I thinking? And I could have gotten in here and it would have been brilliant. And I would have been fully confident at that point. And you'll see things completely differently. So that's the cool part. Okay, let's go into the bearish now. Same kind of description except the opposite. Again, you know, uptrend, major reversal signal again, two candles, again, opposite colors, gaps higher, completely engulfs the prior day's candle. And again, you can see momentum starts to wind down as the candles go from large to big, I mean large to small, and then gets engulfed completely. And then again, the caveat, the exception, if you will, is that that green candle you see before the red doesn't necessarily have to be green or red. If it's a doji, it can be either one, doesn't matter. Okay? So again, the same kind of enhancement we saw earlier, the force, the size, the shadow, how far it gaps, the impulse it has, all that makes a difference in terms of the enhancement behind it. Okay, we're looking at bearish engulfings now before we close out. Well, we lost about half our group because I bored them to death already. Amazing. It's so late, they're yawning. I've killed them already. Do we see it? What do we got? Somebody says 2. Does anybody say 3? Does anybody say 4? Oh, maybe 3. Okay. What about 4? Do I have 5? And I'm sure you're identifying a few other possible candles out there, but okay, maybe 4. Okay, now I'm messing with you now. That's why I'm doing it, because I really want you to think and see and identify. Okay, so you've got 2, really. You actually only have 2. You might have thought maybe, just maybe, the one over here, this little guy over here, you see where my cursor is, actually is more of a, I think it was a bull sash. Yeah, so it was not quite an engulfing. It was not a dark cloud cover either, or it might have been a dark cloud. It was one of those two. I can't quite tell by looking at it right now, but those are the two. And then you can see the levels of resistance and the size of the shadows, of course, as well, and the number of times, of course, it tagged those levels, and then, of course, what happened thereafter. So if you, again, you look at risk reward. So if there was prior resistance over here, and then you saw the dark cloud cover, and you decide to get in. So either you're feeling confirmed right away because the resistance is there, or you're waiting for the next candle. Okay, fine, you wait for the next candle, it's there. Is there a trade? Well, your stop's up here, the highest point, there's your stop. You're entering here, and your target's down here. 2 to 1? Not quite. Not quite. If you had gotten in right away, you may have had a better chance of maybe a 2 to 1 there, possibly. I didn't quite measure it, but it looks pretty close. What about over here? So now you've got clear resistance, and you're seeing it, so now you want to get in right away. So you get in here, your stop's up here, you're getting in here, your target's where? All the way down here. That's a better trade. That's the better one. Pretty close to the other one, right? Now, of course, keep in mind, you could be going, selling, shorting, and then going long, right? So it comes down, comes back up, whoop, comes back down. So eventually it did make it, didn't it? And it certainly tested your intestinal fortitude, but eventually panned out as the days progressed. So 2 reasonable trades, and you could have probably gone long on some of these as well, especially back here on that one right there. That was a bullish reversal signal, and it went all the way to the top. You could have turned and reversed your pattern right away. Okay. What about this one? This one's a little more obvious, isn't it? Right there. So there's a doji right before. So a doji, just so you know, is more of a refresh. It's more of a pause. It's telling you the markets are getting tired. You don't know which direction it's going to take, but certainly you've got to pay attention to them. And so certainly you get a gap higher. It tags the prior shadow, and then fails and closes lower. And then, of course, from there is an immediate short and goes lower and lower and lower and lower and lower. So a good short option right there for sure. Okay. Another one. I'll advance a little faster because it's the end of the night. And you can see the retest that occurred. So it engulfs quite well, right? It gaps higher and completely engulfs the candle. Now, what other enhancement? How many candles did it engulf? 4. It engulfed the 4 prior candles, which tells you even more significance, right? So you had the big thrust, and look at the size of the candles on the way up, right? Big, not quite as big. Pretty big, gets a little smaller, pretty big, then small, 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 and not too bad. And then this thing just absolutely engulfs these 4 right there. So gets a little quieter, and then boom, ugly. Comes back and retests. There's your stop. Comes back and retests it, then immediately fails and comes back down. So you might have thought initially, oh, I'm wrong. But again, you follow the rules. There's nothing that tells you there's a buy signal in here, right? Nothing that tells you at all. And then your short actually worked out after all. Okay. What about here? How many? I'm going to make you go a little faster. How many? Come on. Go, go, go. Okay. 1, 2, 3. Okay, you see them now? All right, and how big were they? Well, the first one was huge with a doji right before, which is pretty significant. It comes right back, bounces back, and retests that area and then fades aggressively, by the way, right? So if that was, in fact, that first one, again, a trade, you see that as a trade, and you decide to get in based on that. Again, intestinal fortitude, your stops above here, it comes all the way back down, and not only that, again, it tests you again, and all in one day, boom, meets your target. So certainly tested your strength, but again, the trend was up, and so you have to remember that the context of when you have reversals, that's nice, but how long and how fast will they decline, or vice versa? If they're a bottom, how fast will they go to the upside? You've got to keep all those things in perspective. You got another one over here, so you got resistance all the way across to some degree, right? Shadow here, boom, comes back down. Test, 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 test. It's still there. Now it's formed a box. So really, there's your support now, and unfortunately, there's no trade until it finally breaks this now. It's got to break below that and go into this area as your target. So really, the risk reward is actually better now because this is your range. There's nowhere to trade when it comes off that because there's nowhere to go. There's support all the way across there. It's not until it breaks that support is there really a trade, in which case your target's down here now. So it converts itself from a top reversal to something altogether different, to a box formation and a breakout is what you're looking for. All right? Okay. So how many people have asked this question for? Why am I feeling so overwhelmed every time I think of doing a trade and making an investment? How many people have felt this way? Well, my hopes was that, after reviewing this stuff tonight, that a lot of this is going to go away. That essentially what's going to happen is you're going to be able to go yes or no, and I'm going to know a lot more and a lot better now when to enter a trade based on what you learned. So let me ask you this. I want you to raise your hand. Those who say now, wow, this was really, really helpful. I think I've got a better grasp now what I'm going to be looking for and how I'm going to be going about my business every day now. Raise your hand, those who feel different now, feel better now after reviewing this stuff. Okay. All right. Well, it's not bad. I'm going to say more than 50%, close to 60%. Now, okay, I'm going to clear that. So, of those that did not answer, I'm not sure why you didn't answer. Is that because you already felt good? Did you feel worse? Let's put it that way. So you feel more confused now? Anybody feel more confused? Steven, it's so nice to see you, by the way. So nice to have you here. I miss having you around, buddy. I know you work hard, but it's nice that you made the time. So I appreciate you being here, buddy. Okay, so nobody raised their hands, so nobody's more confused. Thank goodness for that. So for those who did not raise their hands, I'm not sure what happened, but I'd like to hear from you guys one way or the other. Either type something in or send me an email or Skype or something explaining, what's going through your heads, because that's my hopes are that right now things are much, much better for you. Okay, so good. So I'm hoping that you all going, yes, this is cool stuff. It's awesome. I like what I'm seeing here. This is very helpful. That's what I felt like. I mean, I'm telling you, the world shifted after I started to really understand this stuff. It's like night and day for me. And I thought I was doing pretty good before. It's not even close to the same for me at this point. So at this point, if there's any questions, I want to entertain more. I know we had some all the way through, but I know it's late as well, so I certainly appreciate those that are hanging in there. We've got about half the crowd that are still hanging out at this point. So, of course, I do appreciate that. So if there's any questions, this is the time to go about it. Let's have some fun if there's anything at all. So if there's anybody who's typing, raise your hand first. Let me know that you're typing something so that I don't just disregard. So somebody just said here, yeah, great stuff. So, yeah, thank you for that. And somebody else said that consolidated a lot of missing links. So that's good. That's a good comment. Had a good feeling for it, but this was a good reinforcement. Okay, good. Yeah, so I know Richard, by the way, and I meant to put it as a slide, as a testimonial. So Richard, I know you said it, you didn't mind me saying it, but what he essentially said to me was he has learned more in the last month or so than he has in the months and years prior of trading, discussing candlesticks. And so I felt very good about it. So I really did appreciate that comment a lot, and I took that to heart. So I appreciate that very, very much. And I think that that's going to be the same thing. I know Richard is engaged very deeply in stocks and trading, and he spends a lot of time trying to learn and understand and trying to find methods that will fit and stick. And he is extremely analytical. He analyzes everything almost to a fault, in my opinion. I know he won't mind me saying that because I've told him this many times before. But for him to say that means a lot. It says a lot that it's, you know, the light bulbs are going off for sure. And so yeah, this video is going to be available. So certainly, in my opinion, going over them and reviewing them again is going to be useful to you, going over the examples. And certainly at some point, my hopes, of course, is you join us in coaching and that you will bring stocks or bring questions to the Tuesday night session. That's where really we're going to spend more time on candlesticks is Tuesday nights. You bring your questions. And if you don't and you're going to review the video, because if you're not there live, then by all means, send us something. Say, hey, could you review this for me? I'll watch the video later. I won't be there live. And people have done that before, and I would certainly welcome that again, because that's what it's for, is to discuss this sort of thing. So by all means. Okay, good. So I don't see any other questions. I don't see anybody else asking or raising their hand saying they're typing. So I guess at that point we can probably conclude. And again, this video will be available. So Kevin, I guess I could put this in the advanced section, or also maybe send it off as a link, as an email. I might even do that as well. It's probably the best way I'll do it, is to send it off as a link, because some people may not have access to the coaching site that we're here tonight as well. So to make it, quite frankly, available, I think we'll just make it available to the public. I think Kevin even said possibly even putting this on YouTube. We might do that as well. All that works for me too. Okay, so going once, going twice, going three times. Is there anybody who's last questions at all before we finalize the evening here? Anybody at all? Okay, good deal. All right, good. Well, I know Kevin was in the background listening and watching as well. He's recording this as well as I'm recording from the standpoint of a backup. Thank you. Great evening. Good comment there. I appreciate that very, very much. Appreciate your attendance. Appreciate you hanging in there with me as long as you did. I really didn't expect it to go this long, but as I said, the interaction certainly helps. And consequently, I may have gotten a little long-winded, but I think, quite frankly, it was a great, great lesson for everyone. So good. Thank you, everyone, for your participation. Thanks again. We look forward to those. If you want more of this, we want to go through more of the candlesticks, by all means, then you need to let us know, give us the feedback one way or the other. Okay? Very good. Have a good night. Enjoy the rest of your trading week as well. Talk to you very, very soon. Thanks again.